I've been wanting to create a video about brokers for quite some time because I feel that as part of the overall business plan of being a trader, we shouldn't just focus on strategies and setups and trading psychology if that's what you need. We also need to take into account the broker that we trade with. And I think that there's so many people that are blissfully unaware of just how much so many brokers are charging. Now, I happen to have researched more than 100 brokers from all over the world, and we're talking about CFD brokers and CFD slash FX brokers. And I think the best way for me to illustrate the point I want to get across is if I show you two cans of Coke. Now, I think you'll agree with me that these cans of Cokes are 100% identical in looks and in product. Say this can of Coke here was $1 and this can of Coke here was $2. Why would you pay $2 for a can of Coke if you can buy the same product identical for $1? Now I know it might not be the best example in the world because of course there's going to be many situations in a life where we want something right here, right now, and we're prepared to pay a little bit more for it. I mean, we know that we're going to have to pay more for a can of Coke in a restaurant than, say, in a supermarket. But in the grand scheme of things, as part of our general trading plan, if these two cans of Cokes are, say, representative of euro-dollar, why would we pay more in spread when we're trading euro-dollar, especially if we trade euro-dollar many times every single day, or gold, or oil, or stock indices, or individual stocks? The commissions that we pay is representative of the bid-ask spread. And if we pay quite a lot in our bid-ask spread, well, then that's actually money going out of our pockets into the broker's pockets as part of their business. And that's fine. I don't have a problem with paying a bid-ask spread. But the problem that I have is that many people are unaware that actually they are, proverbially paying $2 for the same product that they could get for $1. And I guess I wanted to create a video that didn't have an agenda, because it's very easy to find comparison websites where the comparison owner will compare, say, well, every single broker in the world. But what you always notice is that the ones they favor are always the ones that they have an affiliate link with. So I wanted to create an unbiased comparison study, which was focused on one thing and one thing only. It wasn't focused on looks. It wasn't focused on feel. It wasn't focused on what color the charts were. It was just focused on one thing and one thing only, and that is how cheap can I get from point A to point B? In other words, how cheap can I get the can of Coke? How cheap can I get euro, dollar, sterling, dollar? But in doing so, I actually came across an industry that is rife with behavior which is, in essence, quite despicable. I won't mention names just yet, but I absolutely categorically assure you that I will mention names because, in a sense, it is a name and shame video. Because I'm a trader who have now been engaged with CFD trading and FX trading for 2 decades, and I have actually, in one of those 2 decades, worked for a brokerage. And so I have a very good insight into how brokers behave. And what this video will uncover is some of the practices that FX brokers and CFD brokers are putting forth at the detriment and at the cost to you. And sadly, I think that the vast majority of people are simply unaware of that. So let me give you a couple of examples. See, the majority of brokers, they will offer bid-ask spreads that are variable. And a variable spread essentially means that you don't quite know if you're going to pay zero point 0.6 for euro dollar or zero point 0.9 for euro dollar or maybe even 1.1, because as the broker states, it depends on the underlying volatility. And, that's fair enough. But the problem with that argument from the brokers is that that creates a lack of transparency for you and I. Because if at some point during the day you can trade euro dollar at zero point 0.6, but at another times you have to pay 0.9, and that could be the second after, well, then you and I never truly know what price we're executing at. And if you are comparing zero point 0.6 to 1.2, well, actually, one is 100% more expensive than the other. So in essence, your commission cost has just gone up 100% for this particular trade. Now, I'm pretty sure that if you went down and exchanged your holiday currency and all of a sudden the cashier behind the desk said, I'm sorry, sir or ma'am, but the cost of doing this transaction has just gone up 100%, you would walk away. But we don't do that with brokers because A, we might not be aware of it, or B, we just say, well, it's just zero point 0.6. But zero point 0.6 many times a day over a full year, I assure you will add up to quite a significant pot of money. Another problem that I had doing this comparison study is that many brokers start from an uneven starting point. And let me give you an example, and again, without mentioning names, because I will mention these names later on. But one particular broker that I found offered very favorable spreads. But when I dug a little deeper, it turned out that in order for me to get the favorable spreads, I needed to deposit $50,000. Now, it's not that I don't have $50,000, but what we're trying to do here is to create a like for like study. And so it's unfair to compare a broker that has variable favorable spreads, but with a caveat that you need to start with $50,000 to another broker that doesn't have these, what shall we say, constraints or conditions in order to get the very favorable spreads. So in an example like that, I simply ignored that particular broker's offer and I said, well, I just want to deposit, say, a standard $1,000 or $10,000. I don't want preferential treatment. I just want to be treated like everyone else. And when I reviewed that particular broker, all of a sudden it went from being a very favorable broker to being a very unfavorable broker. Now, when you're creating a comparison study, you need to compare like for like. But as I said earlier, that's very easy because euro dollar is going to be euro dollar no matter who we trade with. But it's also important then to go in and you create a, say, a, a collection of, say, 10 instruments that you compare. It's a bit like going into two identical supermarkets or near identical supermarkets because they'll never be 100% identical. And in one supermarket, you buy 10 kinds of products. In another supermarket, you buy 10 other kinds of products. But that's not going to work. You have to buy the same things. So what I did was I created a matrix of 5 different stock indice pairs and 5 currency pairs. And then I compared those amongst all the brokers, about 140 odd brokers from all over the world. And it was really interesting because, as I say, euro dollar is euro dollar no matter where I trade. Crude oil is crude oil no matter where I trade, but I found enormous differences. But not only did I find differences, I also found brokers that uh, would offer price oil, for example, at a certain price, but only in a certain amount of size. But if you wanted to trade more, you had to pay a bigger spread. And that's a bit like going into a McDonald's and saying, I like a Big Mac. In fact, I like 2 Big Macs. And the boy or the girl behind the cashier says, oh, well, 1 Big Mac is $2, but if you want to buy 2 Big Macs, you're going to have to pay more for the second Big Mac. And you think, in what world is that fair? In what world does that create a level of transparency for traders like you and I? So that's what this presentation is all about. It's about the ins and outs of how brokers are creating a uh, an atmosphere where the transparency is gone for you and I, but the brokers make more money. And it's also it's also a survey where we try and find the worst offenders, and of course we're trying to find the very best. Now, what I haven't done is I haven't researched. Sorry, I have researched, but I haven't displayed all 140 odd brokers that I researched because the vast majority of them just fall in the middle. So I try to find the very worst offenders, and I try to find the very best, and I have found both the best and the worst, at least what I could find. But not only that, I also researched all the big ones, like, well, you know the names, because those are the ones that always pop up on our YouTube feeds whenever we're watching something. And then, Alec Baldwin or Mads Mikkelsen or those Hollywood A-lists, they're coming in, they're promoting some kind of broker, which is kind of nonsense because I don't think Alec Baldwin is really trading stock indices or oil. And I doubt very much that Jose Mourinho is walking down the pitch on the football field whilst coaching whatever football team he's coaching right now, checking the price of gold or oil. I just can't see it happening. But hey, the power of marketing, you can't underestimate it. But that's what this is all about. So let's get started. So I've called this survey the good, the bad, and the ugly. And the reason why I did that was because there's truly so many awful brokers. And how do I define an awful broker? Well, I define an awful broker by the only criteria that is really important to me, and that is the price, the bid-ask price. If I can trade with a broker that has a 1 point spread, the bid-ask spread of 1 point, versus a broker that has a 2 point spread, well, then the broker with a 1 point spread is the one that's going to win my custom. And it's really as straightforward as that. So what I want to do is to take you through quite a few slides that I have prepared, slides that will open your eyes to what's going on in the brokerage industry, because I assure you, it's quite shocking to see the kind of behavior that brokers are subjecting their clients to. Now, before we really get started with it, I wanted to give you a very simple description of what this is all about. You see, in my philosophy of doing this survey, it, when we are trading, say, Eurodollar or gold or Bitcoin or the DAX or whatever it is that we may be trading, those products are identical. DAX is DAX, and it doesn't matter who you traded with. Dow Jones is Dow Jones, gold is gold, Bitcoin is Bitcoin. And I use the Coca-Cola metaphor because it doesn't matter where on God's green earth you are buying a can of Coke, it's still going to be a can of Coke. And why would you pay $1.50 for a can of Coke if you can buy the same can of Coke for $1? And yeah, I know there's a flaw in that argument because, there will be times when you are in a restaurant and you would expect to pay more for a can of Coke in a restaurant than you would in a supermarket. But you don't go to a restaurant all the time. You don't even go to a supermarket all the time, but you trade all the time. And so if it's something that you do continuously, you're meant to be a trader. That means you are supposed to be price astute. You need to be price aware. And if you repeatedly pay over the odds for the same product than you would have elsewhere, well, then you're not off to the best of start on your trading career. And the following slides is going to take you through some of the things, some of the behaviors that the brokers subject you to that you are probably not even aware of. And as I said before, it's quite shocking to see what brokers get away with. One of the brokers that springs to mind is I read in the Financial Times that a broker called Etoro has acquired nearly 3 million new accounts in the last 12 months. But to me, that's just shocking to read that, because in my survey, eToro was one of those that came out worst in the survey because of their atrocious spreads. But we'll cover that in a second. Let's go to the next slide, because this next slide really just hammer home what this is all about. Now, you got two brokers here side by side. One is TD365.com and the other one is igmarkets.com. And as you can see, it is both of them are displaying sterling dollar, and one of them has got a 0.8 spread, whilst the other one has got a 1.5 pip spread. So, I could take it away from the whole sterling dollar, euro dollar, and just say, imagine it was a can of Coke, and one can of Coke you could buy for 80 cents, and the other one you had to pay $1.50 for. Well, if it was the same kind of Coke, wouldn't you pay 0.8 rather than 1.5? I mean, that's the kind of logic that governs my behavior, my trading instincts, is that, I try to seek out value. And so why would I pay over the odds if I don't have to? Now, just to bring that argument home, imagine these two fictitious people here, Tim and Jim, and they both trade sterling dollar twice a day. But Tim, he trades with, say, IG, and he's trading at a 1.5 spread in sterling dollar, whilst Jim, he trades with TD365, and he's trading at 0.8. Now imagine that they traded this twice a day, every single day of the year. How would they match up at the end of the year? Well, Tim, he would have spent $7,650 in bid-ask commission, whilst Jim, he would have spent $4,080 in bid-ask commission. So in other words, Tim would have spent $3,500 more than Jim has, even though it is two totally identifiable, identical products. Now, I don't have a problem with brokers making money. I've highlighted in here in yellow from plus 500, where it says, let me just, plus 500 is mainly compensated for its services through the bid-ask spread. Now, all brokers will charge a bid-ask spread, but what's deceiving is that some brokers will just charge the bid-ask spread and that's it, whilst other brokers will say, well, we got really tight spreads, but then we'll charge you commission on top. And so when brokers are doing that, the transparency has gone out of the window. Another thing that brokers use to lure you in is they say, we have spreads from zero. I think that's the next slide. No, it's one coming in a second. And again, that's totally deceiving because you're thinking, am I going to trade on a zero bid ask spread? Sure, 3 seconds every 24 hours, it might be at zero. Otherwise, it's 0.1 or 0.2. And then the commission comes on top. Now, what I see as a problem here is that many brokers, like IG Markets, will have what's called variable spreads. So I was lying a little bit when I said that the spread in sterling dollar at IG Markets was 1.5, because in reality it's a variable spread. And during my research, I found that at times IG would charge 0.9, and at other times they would be charging 1.5. But those spreads could be right next to each other. So if you're looking at the slide right now, you will see that the bid-ask price for sterling dollar is around 170, 77, 78, 79. Those screenshots are taken right after each other, but on one side, you're paying 1.5 in spread, and on the other side, you're paying 0.9. Now, that's a fair big difference. It's not quite 100%, but it's not far from it either. So if you went into, say, a McDonald's and you wanted a Big Mac, and all of a sudden the cashier on the other side said, excuse me, the price has just gone up 80-odd%. Wouldn't you walk out? Wouldn't you say, well, what kind of transparency is that? Well, at sometimes you charge 0.9 for the burger, and other times you charge 1.5. What's that all about? And so you feel like you're being drawn into some kind of Forrest Gump Twilight universe where, the metaphor with life is like a box of chocolate. You're never going to know what you're going to get next. Well, that's the curse when we're trading with brokers that offer variable spreads. We don't know what we're going to get next. And if you want to avoid that, you need to find yourself what's called a fixed spread broker, which there aren't that many about. So, as I mentioned before, some brokers, they will use very, very glossy marketing material. And IC Markets is in particular guilty of that in the sense that they are very quick to proclaim that you can trade with them on raw spreads from zero. But the operative word here, ladies and gentlemen, is from. You can buy Big Mac from 10 cents. Unfortunately, you can only buy the 10-cent burger at 3 o'clock in the morning from 3 o'clock to 3:01. The rest of the time, the burger is going to be $1 or more. Well, they're not exactly lying. And I'm not saying that IC Markets is that grotesque either. But one of the things they forget to mention in their glossy marketing is that zero spread is not guaranteed. You may or you may not get it. And more likely, you're unlikely not to get it. And on top of that, they will charge you commission. And you have to realize that when you are trading with a broker that advertises spreads from, those are variable spread brokers, which essentially mean you don't know what bid-ask spread you're going to trade at. So let me just give you a very quick primer of the whole scenario with bid-ask spreads and fixed spreads and variable spreads. So the spread is the difference between the buy price and the sell price. And you'll always see two prices whenever you're trading. And there's the there's the bid price and there's the ask price. And a fixed spread broker is a broker that doesn't change the dynamic between the bid and the ask. They may change it in hours versus out hours. So for example, one fixed spread broker I saw had very tight spreads in hours, but then during the night, they were still fixed spreads, but they were slightly wider to reflect that the market was actually closed. And then you have variable spread brokers, and variable spread brokers is basically an FX CFD broker that will have whatever bid-ask spread they desire. So if the market all of a sudden gets particularly volatile, they can widen the spread to however wide they want. And whilst you may just accept that, you don't necessarily have to. And what this video is all about is truly to, dare I say, expose the whole FX and CFD broker industry for what it is. Because if 3 million people have opened an account with Etoro, I assure you that that's 3 million people who have no clue what the pricing structure of Etoro is, because if they did, they wouldn't have opened an account there. Because it's a bit like going into a supermarket where they charge nearly 200% more than the supermarket next door. And it's not like you're going to get the velvet treatment when you're in there either, because as I said, it's the same product. Eurodollar is Eurodollar. A can of Coke is can of Coke. Okay, so I create quite a lot of trading videos, and those videos are basically about me live trading. And the reason why I wanted to show you this is because I have quite a significant amount of experience, not only with trading, but also in the trading industry. I've been in this industry for 2 decades, of which I've worked for a broker called CD Index for nearly 1 decade. So I have a really good insight into what brokers get up to and how they go about it. And because I am a high-stake trader and a very frequent high-stake trader, it does mean a lot to me who I trade with. So for example, I'm not going to make a secret of that. I trade with a particular broker, but I only started trading with this particular broker when I realized that this broker was the cheapest by far. You see, I investigated more than close to 150 brokers from all over the world. Brokers in New Zealand, brokers in Australia, brokers in Germany, brokers in England, brokers in Ireland, brokers in America, South America, you name it, even Canada. And the reason why I did that was because I wanted to find a broker that was best suited for my needs. And then I realized, well, it's not just my needs that are best served with a broker that charges as little spread as possible. We all are. And I want to give you an example of just how dramatic the effect is when it comes to the bid-ask spread. So I like to trade the FTSE index, and the broker that I trade with charges 0.4 spread, 0.4 bid-ask. So the difference between the bid price and the ask price is 0.4 of a FTSE point. But then take one of the granddaddies of the trading industry, plus 500. Their spread in the FTSE index is 2 points. And so if I trade £300 a point 5 times a day, and that's pretty much the bare minimum of what I'm doing when I'm scalping, I would end up paying £765,000 to plus 500 in bid-ask commission. I'm sure they would love my custom. Whilst the broker that I trade with, TD365, will have charged me $153,000. Now, you don't have to grab your calculator to realize that there's a fairly significant difference between 153,000 and 765,000. Now, ladies and gentlemen, I perfectly appreciate if you think I am just full of shit. I truly understand if you believe it cannot be that dramatic, but I want to prove it to you. So what I did was I took a screenshot of plus 500 so you could see for yourself that the spread is indeed 2 points in the FTSE. You'll also see that their spread in the Dow is 4 points, whilst the broker I trade with has a 1 point spread. So, do you follow me here, ladies and gentlemen? You can either choose between paying $4 for the can of Coke or $1 for the can of Coke. You can pay 4 point spread in the Dow versus 1 point spread. You can pay 2 point spread in the FTSE, or you can pay 0.4. And here's the documentation from TD. So you can see this for yourself, that I'm not making this up. So the whole idea of this survey was because I wanted to create a comparison matrix between many different brokers. But that in itself is fraught with some difficulties because, as I said, a variable spread broker may at times offer the market at one price and at other times offer it at a different price. So what I did was I said, well, if there's two different prices that are variable spreads, and that's usually the norm, say IG was 0.9 to 1.5 in sterling dollar, I added those two numbers together and divided by 2 to get an average price. And so I selected 5 FX pairs and 5 stock index pairs, and they were the foundation of the matrix to which I then would go out and I would test more than 100 brokers from all over the world against these 10 products. And so in essence, I created a big matrix of different prices for many different brokers just to identify who offers the best prices. And that's what this is all about. Now, I'm not going to go through 150 odd brokers. I really am not, because you would turn this video off way before I ever got to the end. And, I would probably lose my voice by the time I got to the end of it anyway. And so neither of us would be served well by doing that. So let me just tell you a few things. I have taken the worst offenders, and I've taken the best brokers, and then I've taken the best known names. And it's about 5 or 10 different brokers that I've highlighted here, because I feel that those are the ones that you would be interested in. You'd be interested in knowing which broker is the best broker, which broker is the worst broker, and the really famous ones, like the IGs of the world, the CMCs, the Pepperstones, the IC Markets. You want to know, where do they compare? Then there's a bunch of MT4 brokers and MT5 brokers, with dubious licenses. I don't know where, Vanuatu, and I'll give you what, and the Marshall Islands. I kind of just, although I researched them, I just kind of left them alone because they're not cheap. They're not mega expensive either, but they're kind of pointless because I'm never going to send my money to Vanuatu or the Marshall Islands. It's just out of principle. So the results are shown like this. First, you have the name of the broker, and then you will have all the FX spreads added together, and then you'll have all the stock index spreads added together, and then you'll have a combined score. And that's really how it's shown. But I'm not going to show all 150 odd brokers here. You're going to have to go to my website, tradertom.com, and go to resources and go to the broker report if you want to see where your particular broker falls in. And if I missed your broker, and that is a possibility, then just send me an email. I'll give you the email at the end of this video, and then you can ask me to review your particular broker. So let me give you one more example before we get into the nitty-gritty of it. Say that we're looking at a famous broker like XTB, which isn't a bad broker, and Markets X, markets.com, Market X. Take a look at their spread in the FTSE. They are 2 points versus TD's 365's 0.4. Now, what's interesting here is that you might not trade £300 a point, but say that you are a more modest trader, or should I say a more normal trader. I don't think I'm particularly normal. Say you trade 5 times a day, and whenever you do, you trade £10 a point. That's not, I think someone once told me that the average bet size for a retail client is about £7-8 a point. So I don't think £10 a point is so outside the norm. If you traded 5 times a day, you would spend £20 in silent bid-ask commission every single day. Versus if you traded with a broker that had a 2-point spread, you'd be spending £100 a day in silent bid-ask commission. Now, it may not seem like a lot to you, but over the period of a full year, that's the difference between spending £5,100 in bid-ask commission versus spending $25,500. So I'm just asking you, wouldn't you like to have that $20,000 in your trading account rather than having paid it to your broker in silent commission? Yeah, I thought so. Okay, so let me just go full camera here on myself for a sec, because one of the things that I have noticed as a trader is that whenever I go on YouTube to watch whatever, it could be a music video, or it could be a brokerage video about trading psychology or strategies, or whatever it may be, I've noticed how often the likes of Alec Baldwin and Jose Mourinho are popping up on my newsfeed. Even the Danish supervillain Mads Mikkelsen, who was probably the best ever James Bond villain. And I probably say that because I am Danish, but he was spectacular as Le Chiffre, I think his name was. But when did the trading world, develop into this, the world where Alec Baldwin started promoting trading, or Jose Mourinho, who's a football coach for some London football club, or Mads Mikkelsen, who is an actor? When did they become the poster boy or the spokesperson for the trading world that you and I occupy? I get up at SHIT o'clock every single day to do my research, to do the chart, to prepare for the trading day. I really don't see Alec Baldwin getting up at 5 a.m. and look over the Eurodollar chart or Bitcoin or gold or whatever he may be trading. And I don't think Mads Mikkelsen, no disrespect to him, but I just really don't think that these guys are full-time actors. And then at the same, on the side, they're also day traders. So, I don't fall for that. I don't fall for that BS. And frankly, I think what we should do is we should judge brokers on facts, on merits. We should judge them on how cheaply can I get from point A to point B. And I don't really care if Alec Baldwin is a spokesperson, or it's Madonna or Halle Berry or whoever it may be. I want to know how cheaply can I trade the FTSE, the DAX, the Dow, the Eurodollar, sterling dollar, Bitcoin, and you name it. And then I want a broker that is transparent. And the next slide here gives me no pleasure in showing you, because it's actually a Danish broker, which I think shall remain anonymous. During the sell-off back in February, March 2020, this particular broker on their Dow Jones feed had a 14.5 spread on the Dow. At that point in time, I was trading on a 1-point spread. But that is the curse of a variable spread broker, particularly, ladies and gentlemen, when it gets volatile. You see, when it gets volatile, a broker can do whatever the hell it wants. And in this particular instant, this broker did exactly that. And so if you want my advice, try and find a broker that has a reputable pricing policy, or even better, find a fixed spread broker, because then you'll never, ever have to be subjected to that kind of behavior. Because you know what, ladies and gentlemen? Some poor sod executed a trade at a 14.5 spread on that particular day. At the same point in time, other people like me traded at a 1-point spread. So whoever did that traded with a bid-ask commission that was 14.5 times bigger than the commission, the bid-ask commission that I paid. And that's not fair. Okay, let's start with IG Markets, because that's like the granddaddy. They're the ones. IG stands for Investors Gold, and I think it was a gentleman called Stuart Wheeler that started it back in 1973. You know what? I was barely born in 1973. Well, I was, but only just. And he started it offering, as the company was called, Investors Gold, IG. Apparently it's the biggest broker in the world, but that's funny because virtually every single broker of some size says they're the biggest broker in the world. So I'm not really sure what matrix they use to gauge. I know that IG at one point stated that they were the biggest broker in the world, but depending on the revenue that they generated, which kind of makes me think, right, you're judging yourself on being the biggest broker in the world on the merit of how much your clients are losing. Maybe not the merit or the matrix I would use as my gauge for whether I was the biggest broker in the world or not. Okay, look, IG, we probably all know IG, but what disappoints me about IG is that it's a variable spread broker. And the curse of it, as I've already shown, is that at times you'll trade sterling dollar at 0.9, and other times you're going to have to pay 1.5. Now you may say, oh, it's probably just in sterling dollar, but it isn't just in sterling dollar. It's in every single one of their FX products. Here's the US dollar against the Canadian dollar. And as you can see, at times they're 1.3, which is very respectable, and at other times they're 2.1. And it isn't just in the US dollar versus the Canadian dollar or sterling dollar. It's also in euro dollar. And you, for example, I took this screenshot on the right hand side where you see that the spread in dollar yen is 0.7 and euro dollar 0.6, which is very respectable. But then when you go to the trading platform, you will see euro dollar just as often trading at zero point 0.9. And just as often dollar yen will be trading at 1. And a 1 point spread in dollar yen, that's not cheap at all. So it's disappointing to have a broker of such magnitude actually engage in that kind of behavior with their client. So the overall score for IG is 11.27, 5.25 on FX, and 6.02 in stock indices. And over here on the FX side, obviously what I've done is I've had to add the lowest spread that I found and the highest spread that I found, and then divide it by 2. Okay, the next one is CMC Markets. Now, I quite like CMC Markets, not just because I did an event for them called the Opto event, which was a fantastic evening, very professionally set up. And they got a slick platform. And when you look at it, their score is 9.8, which makes CMC Markets quite a lot cheaper than IG. In fact, IG Markets is 15% more expensive than CMC Markets. And I'm not trying to name and shame IG Markets. No, it's just a fact. Those are just facts, ladies and gentlemen. It's not something I'm trying to make CMC look good because I have an affiliate agreement with them. I don't have any of the sort. I'm just reporting the facts. How cheaply can I get from point A to point B? Nothing more, nothing less. I'm not judging the brokers on whether I like the colors of the platform or whether I like the syntax or like the font or whatever it may be. No, just the prices. The next one is City Index. Now, City Index, full disclosure, is my old employer. So I spent nearly a decade with them, although it is nearly 12 years ago since I left the company to start trading for myself. Now, City Index is not doing very well in this comparison survey. Their overall score is 13.55. Yeah, it's a nice platform, but there's not good spreads. And City Index is more than 20% more expensive than IG Markets and more than 38% more expensive than CMC Market. And so imagine there's a supermarket called City Index and there's a supermarket called CMC Market. Where would you go? Would you go to the 38% more expensive supermarket, or would you go to the cheaper supermarket? Because remember, it's the same products. I mean, I know I've said it before, I want to say it again. That's kind of the key driver here is your dollar is your dollar, no matter who you trade with. Okay, the next broker is one of the only fixed spread brokers that I found called TD365. Now, TD365 is a real unique broker in that it was the cheapest broker in the entire survey. So in fact, I think it might just be the cheapest broker in the entire world. And that makes CMC Markets 44% more expensive than TD365.com. And it makes the granddaddy IG Markets 65% more expensive across those 10 products than TD365.com. And so that's a real, oh my God, that's a big saving. Or should I say, that's a big leap from one broker to another. Now, talking about an oh my God moment, if you want a true oh my God moment, then welcome to Plus 500, the world's trading machine. Now, I was so shocked by the prices of Plus 500 that I had to double check. And I'll show you the documentation, as all of the documentation will be is available on my tradertom.com website anyway. But their score is 16.47. Now that's truly shocking because Plus 500 is not a small brokerage. It literally have hundreds of thousands, if not millions of clients. And those millions of clients, are they not aware just how much they're paying more in bid-ask commission, say against CMC or IG or TD365? Well, you see, during this survey, I literally came across brokers. I was thinking, really? Why are they still in business? This makes no sense whatsoever. So here's the proof. just so you can see it for yourself. I'm not doing this with every single broker, but I just wanted to show you the spreads of plus 500. And then I wanted to show you at one point when I did the research on plus 500, look, they're 6 point wide. 6 point wide in the Dow Jones index. What's that all about? Okay, now let's just sum up the score so far. We got IG at 11, CMC at 9, CD index at 13, TD at 6, plus 500 at 16, and then next one is Etoro. But before we move on to Etoro, I want to tell you something which I think is pretty important for you to be mindful of. That what I'm doing here is I'm showing you brokers that are regulated. I would never trade with a broker that wasn't regulated, and I would never ever evaluate a broker that wasn't regulated. So all of these brokers, the ones you're seeing here and the one I researched, they will be regulated somewhere in the world, which means that you have some guarantees that that you are trading with a proper broker. Okay, let's do Alec Baldwin, eh? I don't really know how to hide my surprise, but Etoro is truly an expensive broker. And that's a very worrying trend because Etoro has added millions of new users in the last 12 months. We'll come to that in a second. The overall price comparison puts Etoro in at an 18.85, which is the absolute highest we've seen so far. Now, what I am concerned about here is that Etoro is really marks itself as a social trading platform, which means there are millions of users that are paying way over the odds by trading with Etoro, and they're probably not even aware of it. And I think that is not only a shame, but it's also it's a mind-boggling conundrum, because we are living in a time where regulators are trying to clamp down on the amount of leverage that retail traders can use, but then at the same time they're basically letting brokers get away with absolute murder. You know, an overall score of 18.85 over 10 products, which is it's virtually 100% more expensive than CMC Markets, and nearly 200% more expensive than TD365.com. That's shocking. Another broker that I was shocked by is IC Markets. I felt like I was being dragged into an episode of Sneaky Pete, the Amazon original, and I felt that IC Markets was deceiving its client. It's almost as if they had made it the art of not making it easy for clients to understand the true cost of trading. I'll give you an example. They are offering the DAX spread at 0.7, which is actually really cheap, considering that CMC, I think, is 1 and TD365 is 0.9. So 0.7 is very cheap. But then they forget to tell you about the depth of the market. Now, how do I explain the depth of the market to you using a metaphor? Imagine you go to Burger King and you want to have a Whopper. And then your friend comes and joins you and say, hey, can you buy me a Whopper as well? And you say, hang on, hold the order. We want 2 Whoppers rather than 1 Whopper. And then the guy or the girl behind the counter says, hang on here. If you want 1 Whopper, it's going to cost you $1. But if you want 2 Whoppers, the second Whopper is going to cost you $1.50. And you're going to go, well, how does that add up? I'm just buying 2 Whoppers. It's not like I'm buying 50,000 Whoppers in one go. Why am I being charged more for the second? That's what the depth of the market is. If you look at this, if you study this very closely, you will see that it's circled here, that I can, if I'm trading, say, 10 euros a point, I can get the first €6.50 at one spread. But from then onwards, I'm paying a higher spread. And that spread has just gone up 0.6. So the reality is, I'm not trading, even if I'm just trading relatively small size, I'm never going to trade at 0.7 with the IC market. What I calculated here, the real spread is 1.16. And that's not cheap. That's not cheap at all. That's about 20% more expensive than with CMC and TD365. So do you see what I'm getting at here, ladies and gentlemen, is that on the surface, it looks like a really appealing spread, but once you start digging into it, it's not cheap at all. And what you're seeing here is the actual proof of it. And I think this one is particularly shocking because whenever I trade at least £100 or €100 a point. And if I was to use IC markets using £100 a point or €100 a point, I would essentially end up paying 3.81 in spread. Now, to me, that's a joke. And to me, that is, where's the transparency gone? I thought I was going to trade with a broker that was really cheap. Instead, I end up trading with a broker that's actually over the odds expensive. Even Etoro is cheaper than 3.81. You know what? I'd like to be a broker if I could offer a client to trade at 3.81. I sure as hell could make money from that. So maybe that's my future. I'm going to be a market maker like IC Markets. Now, it's not just in the DAX that I have found this. I also found it in currencies. So here's the proof in euro dollar. The spread is 0.1, not very attractive, but they conveniently forget all about telling us, hey, you're going to be charged a commission on top. So that's what I've highlighted up here in the corner. You'll see, well, you'll be charged commission on top, and that's $26 pounds in and also out as well. But that's even before we get to the depth of the market. So the real spread with commission is 0.74. So even now, companies like IG, CMC, and TD365 has already beaten IC Markets, even though IC Markets is promoting from zero spread. Like, it's nonsense if you can never trade on it. And if you then don't factor in the commissions, you think you're getting a really good deal. And reality is you're not getting a good deal at all. And when I try to do this as in a 10 lot, which is essentially doing €100 per point, it got really interesting because I was able to buy and sell at the same price, which means that at net, I should have just had a break-even trade. But once you factored in commission and once you factored in the depth of the market, you're thinking you're trading euro-dollar at 0.1, but you're not. You're easily paying 0.75 to 0.96. And ladies and gentlemen, I'm sorry, IC Markets, but that's not cheap. That's not cheap at all. That's outrageously expensive. And even Etoro is cheaper than that. So, to me, that's the reality of some of the brokers, including IC Markets. But it doesn't mean that their score is that bad. They come in at a respectable 12.71. But still, they are more expensive than CMC and IG Markets, and also, I think, XTB. All right, so we come to the end of this. I'm not going to go through any more because I think I got the most important point across with the things that you need to be mindful of. You need to be mindful of variable spread brokers. You need to be mindful of the commission they charge. But on top of that, you also certainly need to be mindful of that many brokers. Oh, sorry, I think I reviewed so many brokers, and these are just some of them that are written down here. But some of the things that I found was interesting was that it was difficult to do a like-for-like comparison. For example, I found a broker that had very, very tight spread, probably the tightest spread that I found overall, but only if you open an account with a minimum of $50,000. And you're thinking, well, CMC is not asking me to deposit $50,000 to get their good prices. Neither is TD365.com, neither is IG Markets, neither is XTB. And so when I then selected the standard account for this particular broker called Tickmill, I realized, well, Tickmill is almost as expensive, if not more expensive than Etoro. And you only get the really good prices if you had an enormous deposit into your account. And I think that's, in a sense, that's not transparent for clients to trade under those conditions, and perhaps not entirely fair either. Okay, so let's go through the ranking. The top one was undoubtedly TD365.com, a fixed spread broker, very cheap and of course regulated. Then comes CMC Markets, also a variable spread broker, but regulated and very decent spread and great opto events, by the way, that I spoke at you should go and search for that. That's a very good YouTube video on trading psychology. Then there's IG Markets, comes in at a respectable 11.27. I don't know why there's 2 dots in there, but there you go. I got carried away with the dots. It's a variable spread broker. It's the granddaddy, one of the first CFD brokers ever, but not quite, but it's nearly 65% more expensive than TD365. So just the difference between number 1 and number 3 is a 65% price difference across those 10 products. Then we got XTB, variable spread broker, came in at 11.9, and then IC Markets came in at 12.71. And from there onwards, it was just a lot of different MT4 and MT5 brokers. But I want to show you the really bad ones because it's funny. Plus 500, which is supposed to be one of the biggest brokers in the world, came in at a 16.47, which is quite frankly scary considering how big they are. And even scary was that plus 500 came in at 16.95. And then we got Arbitrade. Sorry, I think I mixed them up. Plus 500 was 16.47 and Arbitrade was 16.95. And then we got FX Pro. I think they support some football team. Maybe that would explain why they are as expensive as they are. But they're 17.9. And then Etoro, one of the client-wise biggest brokers in the world, they charge nearly twice as much as number 2 on the top 5, and nearly 3 times as much as TD365. That's just frightening that a company like Etoro can be in business. I mean, you wouldn't expect a supermarket that was 3 times as expensive as another supermarket, why it would still be in business, but they are. Then you got Easy Market, but it's certainly not easy on the spread. They came in at 23.55. And then you got FXTM. Now, I wasn't even sure who they were, but they came in at 45.6. I mean, what the heck is going on there? All right, we are at the end, ladies and gentlemen, and you can see all the results on tradertom.com. Do you know what? I think I realized that people probably want to see the documentation for FXTM. So here they are. Feast your eyes on the widest spreads I ever found. All right, ladies and gentlemen, there we go. It has been a pleasure. If you have any questions for me, you are more than welcome to see if I can bring it up. Here we are. You're more than welcome to contact me if you want me to review your broker. You're more than welcome to contact me on hello@tradertom.com. If you have any questions, hey, you might be a broker that want to complain about this and ask me to take down this video. So I want to say one thing to you. I'm only reporting the facts. That's all I'm doing. And I would never do this if I wasn't able to substantiate my claims. That means I've videoed your platform. I've screenshot your platform. So I think I've got all bases covered. But hey, email me anyway. You take care now. Bye-bye.